Hello, everyone. This is KJ from Average Capital, and today is 20th November 2025. So, welcome everyone. And this is going to be a short video, and we are just going to compare two possible scenarios in which BTC is going to pan out over the next few days, weeks, months, and year. And let's begin with it. So, this is the scenario number one. Before we begin with the scenario number one, just mind that there is this imaginary line which has uh, very meticulously held through the held the structure of BTC since a long time, since the peak of 2021. If you can go to the candlestick, you will see that the wicks are holding the line in the right place, and this line has been, like a magnet, like the opposing ends of a magnet. They attract, and the similar poles are going to uh, repel each other. So in this way, anytime you see the price coming towards this line, the price is going to be repelled away. And we have seen this several times. This is the one, two, three, four, and probably the fifth time. And this line is very important for the structure. uh, as you can see, this is the vertical line which we posted in the last video too, that this is the line before which we must see the bottom of the bear market. uh, and everything is going exactly like planned. We started the video. If you haven't seen the video, please go and watch the previous video. We posted it 2 weeks back, and this is the video as you can see in the screen. And since then, the price has fallen very drastically. The momentum has been very strong. The bears are completely in control. There is no doubt in our mind that the BTC is not right now in a bear market. There is just no doubt. We are in the middle of a very strong bear market. Either scenario, in both the scenarios which we are going to discuss now, the prices are going to reach at the bottom of the bear market somewhere around 25 to 30 to $35,000. Seeing so far, we're not able to pinpoint the exact numbers, but as we move towards it, maybe it gets easier to predict, easier to analyze, which we will cover up in the future videos. But for now, you have to understand that this line is very important. We have held through it back when during the April month of 2025, during the tariff crash which occurred. Prices rapidly they went away from this line, so we are again approaching this line. So this is the scenario number one, where we touch the line, and of course the sentiment is very harsh, and most of the people are turning bearish. And there are so many people I know who wanted to get out during these $100,000 above, but they couldn't because they were stuck in the mindset that the bear market hasn't begun. But ever since we broke the 100K, wait, I'll show you on the daily so you're able to understand what I'm trying to say. uh, Ever since we broke the 100K line, the bears are completely in control. The prices are falling drastically, and if you can see the momentum, it is completely crushed. We are at the bottom somewhere around 29, and of course, this fall will eventually turn about, and that is our scenario number one. So that is the bullish scenario, if that makes any sense. The first scenario is kind of bullish in comparison to the second scenario. So in the bullish scenario, we expect that the prices are going to fall as low as 80,000, and we are going to touch the line or get to that region where we are somewhere between, let's say, 78,000 to 83,000. We repel from here and move back, try to touch the red line, the 200-day EMA, in a very short span. But the only problem with this scenario is that many people are expecting it, so we are not quite aligned that this scenario is going to be the majority scenario. But let's see how it goes. So somewhere around the 110, we are going to be rejected, of course, coming here back to again be touch this black line, and eventually getting rejected by it and moving towards the bottom of this line. If you can see this $55,000, so we will come back to this $55,000 by the summertime, and again touch the black line, only to be rejected very quickly. By this time, 1 year has passed. If you can see, we started, the top was near the July or August. It's not exactly clear what the top is because of these breakouts and a lot of noise which occurred, and maybe a lot of manipulation. But I'll show you in a minute. On the monthly, it is more visible. We'll come back here and eventually fall back to our price targets, which is $30,000 by the end of 26 or Q1 27. So somewhere around that area, we are going to find a bottom. It could be here, it could be here. It's not about the certainties, it's about the probabilities. and that's where we are going to eventually bottom out. Maybe we go back as low as 20,000, 25,000. It is a possibility. And how likely, how not likely it is, we are going to see it later. But let's say we see a dip, a sudden dip back to 25,000, then we come back to 30,000, and then upward and beyond. So this is how exactly we are expecting the first scenario to play out. If you see it on the monthly, it is more visible. Yeah. So as I told you, in the monthly, if you see that the July 25 was the peak of the cycle at $117,000, somewhere around that. And since then we've been falling, and it has been somewhere around like 5 months or so. And within the next, probably by the end of November, in this scenario, we will find a bottom, and by $80,000 we should find a bottom and then move on to the next phase of the cycle. So this is the scenario number one. Now let's move to the scenario number two, which is more bearish. So this is the second scenario. We will start at the same point, and in this scenario we are not really going to be rejected by any of the line, and we are going straight down to something like $60,000. uh, Find support near the 50-day EMA, I mean 50-day SMA. This line is going to be reach around $60,000 by the end of the year. And by the end of the year, it's been half an year, and in half year we find a bottom. Most of the newcomers are going to be liquidated by then, and then we of course are going to be rejected by the 90K region, something like that, and we come back here down, and then again, so something like that. So as you can see, overall, as a long term investor, or as somebody who's in it for the long term, it wouldn't matter if we take the path A or the path B. But either way we are moving towards the bottom, and the path should not matter to you as much as it matters to somebody who's going to trade the market actively, which we do. So of course, the scenario A is more preferential to us because we are getting a better uh, position to structure our shorts. Somewhere around the $110,000 up, anything above $100,000 we are going to sell, and we can get into a very good position. We are very comfortable entering the market here with the shorts which we are able to hold for the next 1 year. But in this scenario we may not get such a place. So of course the scenario first is good for us, and but we are ready for both the scenarios. And there is no doubt that we are again, to repeat the same thing, that there is no doubt we are in a full-fledged bear market, and there's nothing that can stop it. Any of these scenarios could occur, and we just have to deal with it. And this also shows you that you must be prepared for all the scenarios. And even if I'm discussing these two scenarios, of course there are other scenarios that the price is going to shoot up and go to $250,000 in the next 15, 20, 30 days. But of course the probabilities of those are so low that we are not going to consider them, not going to bet against them or for them. Any such scenario occurs, we are just going to sit it through. So yeah, it looks bad, and we just wanted to explain to you that these are the two scenarios in which we can see the market falling. And I hope good luck to every one of you, and we'll keep you posted. And good luck. See ya. Bye bye.